Hi there, I'm Tyler Ballhorn, and this is the Stock Scores Market Minutes for March 14th, 2014. Upcoming events in Calgary and Vancouver. I will be presenting the 8 rules for successful investing. Go to stockscores.com/learn the rules for registration and details of these events, April 3rd and 5th in Calgary, April 12th and 15th in Vancouver. Courtesy of Disnat, the first 500 registered who attend will receive my book, The Mindless Investor, for free. All right, let's get into this week's topic, which is the action candle. I call candles that have an abnormal price action with abnormal volume an action candle. They signal strong buyer interest in a stock. Now you can find them on intraday, daily, or weekly charts. When you get action candles out of predictive chart patterns, you often see the start to strong trends. So if I am swing trading, I'll look at an intraday 13 or 15-minute chart for an action candle out of a pattern and hold that stock for 1 to maybe 5 days. If I'm position trading, I'll look for those action candles on daily charts or even weekly charts to try and get into those stocks early in their trend. Now we can use Stock Scores or TradeStation to find action candles, but here's some examples of what they look like. This is a stock on a daily chart interval, MOBI, on the US market. You can see at the blue arrow you have a strong gain with strong volume out of a pennant pattern, and the resulting trend out of that was pretty significant. But looking at a more short-term chart, this is a stock that I traded last week. There you can see the strong price gain out of a situation where the stock was pretty boring, not trading with a lot of excitement. That is the sign that the market has got excited about something. The volume spikes up, the price action gets pretty active, and the stock goes into a quick, sharp trend. Now to look for these on Stock Scores, you really just need to use 2 filters. The first filter is the abnormal activity filter, which we can set to abnormal day up, and then the abnormal volume filter, which we can set to abnormal volume. Now, it's a good idea to add in other filters so that you have a better chance of getting a predictive chart pattern. For example, I might set the sentiment stock score to at least 50, and so that I don't get a lot of really illiquid stocks, I'll set a certain liquidity criteria. If I'm looking on the Canadian market, I might set a minimum number of trades of 100 or 150 trades. On the US market, I tend to set that much higher, something more like 1,000 trades. We can then click on the Market Scan Report button. It goes through every stock that trades in the market and found those that have an abnormal price gain with abnormal volume and at least a sentiment stock score of 50. The final step is to view those charts. You can view them either with the gallery viewer or the slideshow viewer. If we do slideshow, then we're going to see charts in a fairly large format, which we can go through using the left and right arrows on our keyboard. Now here you can see an example of a stock that made an abnormal price gain today with abnormal volume, and the pattern isn't too bad. We could call that a pennant pattern, and the sign there is that there's something going on that has the market excited. Now sometimes I will take a look at a 3-year weekly view to get the big picture, and in this particular case, because there is some resistance over here, I would probably shy away from that stock. So it's all about chart pattern reading in consideration of the abnormal activity. This is a scan that I do every day on Stock Scores, looking for those stocks that are showing signs of life, and when there's a good chart pattern, often they have a significant uptrend potential. Now we'll also look for these on an intraday basis in real time using TradeStation. I've programmed those same indicators that we use in Stock Scores into TradeStation so that I can run them in real time. And of course, any of my students who've taken my Active Trader program get those proprietary indicators for TradeStation so that I can find situations like this where a stock moves up pretty sharply in the span of just an hour or so, but you need that real-time alert to be able to find those things. All right, let's get on to this week's analysis. We had some pretty strong selling through the week, but when you look at the big picture, and this is a chart of the S&P 500 going back 3 years, you can see that the upward trend is still intact. As we talked about last week, the market was maybe a little bit overbought. It's now retracing back toward the bottom of its upward sloping channel. That's a good thing. That recharges buyer interest. And so I remain bullish on the US stock market, although I wouldn't be surprised if we get a little bit more short-term profit taking because we are not yet at support. The Canadian market also is getting stuck at resistance, this at horizontal resistance from the highs back in 2011. Not unreasonable for the market to stall here, and generally it's still a healthy looking market. We're just going through a couple of slow weeks. The TSX Venture has had a pretty good tear for the last 5 weeks or so and is getting a little bit of profit taking. You can see that it too is at the top of its channel, and anytime a market rallies too quickly, you get some profit taking. No real cause for big concern here. I think this market remains in turnaround mode. And if you remember last week, we looked at the weekly chart going back 3 years. The TSX Venture still has all kinds of upside potential. And so any pullback here is relatively minor in the big picture. Treasury bonds rallied this week largely because of a flight to safety as the stock market sold off. And of course, a rise in prices of treasuries means interest rates go down. The general trend here is still down. I think we're working our way back to the downward trend line, which we are still away from. So I think we could see treasuries continue to move up in the weeks ahead, but long-term outlook is that treasury prices are going down and therefore interest rates are going up. US dollar broke some important support this week, and that means that the US dollar is more likely to move lower than higher. That helps commodity prices, which of course is helping something like gold, which has had another good week this week, and I've been a bull on gold for the last month or two. I continue to think that it is looking good, and I'm liking more than gold the junior gold miners, which have been doing well. The only concern is that you don't want to own too many of these stocks because they are going to be quite correlated to one another. I could have featured 20 of them in my newsletter, but I've tried to keep the list relatively short to a few simply because they do all move together. There are some outperformers, and that's the ones we try to find, those that are leading this sector higher, and I will continue to look for those sorts of stocks. Oil market is in a long-term pennant pattern. You can see rising bottoms, falling tops. Towards the center is where we're at right now. We've pulled back the last couple of weeks, but it's really not a negative outlook for oil. Unlike copper, where you're seeing some breakdowns in copper, many people saying that is a sign of a global slowdown, the oil chart doesn't really indicate any sort of global slowdown. It just indicates a pretty stagnant market for oil, and perhaps that is indicative of the global economy. Finally, fear took a little bit of a jump higher, largely on concerns about what is going on in the Ukraine with Russia. It is not a big pop in fear. You can see the last big pop that we had third week of January into February was much more significant. So there isn't a real rush for insurance by buying options, and that is, of course, what makes the VXX go up. Unlike what we saw in January, you don't have that panic, I guess you could call it, in the options market, and that is a sign that this is just some routine profit-taking in stocks. So I remain bullish long-term on US and Canadian stocks. I think we could see a little bit more weakness in the US stock market in the very short term. That's why I have a bearish rating on the short term. Neutral on Canadian stocks. They really haven't rolled over, largely because commodity prices are improving. The commodity stocks are holding up well. I shouldn't really say commodity prices are improving. Gold prices are improving. But that's helping the Canadian market, which has got a heavy concentration of those stocks. Gold bullish on both the short and the long term. I mean, a big week today wouldn't surprise me if we got a little bit of profit taking next week, especially if any tension in Russia settles down. Oil neutral long-term, bearish short-term. The long-term outlook for stocks is bullish, but there is short-term profit taking as the buyers appear to be a little bit unmotivated right now. Gold is outperforming on political concerns. In a change of psychology, optimism is coming back to the gold market and the gold mining market. Consider a pullback an opportunity in the stock market to recharge buyer interest. Well, I hope to see lots of you out in our April events in Calgary and Vancouver. Remember to go to stockscores.com/learn the rules for details of those events. Have a great week in the market and trade well.